Hi friends, Simit here from informedtrades.com. In this video, I want to take a look at Warren Buffett and the methods that he used to develop his fortune through financial markets. Key points, Warren Buffett is a contrarian. He believes, the best time to buy is when people are afraid, and the best time to sell is when people are euphoric, and he looks to employ that strategy when he's taking positions. He's a value investor. He wants to buy companies that are trading below what he believes they are worth and hold them, until they reach their full valuation or beyond that. Buffett, in terms of, I guess, the art element or the analysis element of his approach is very contingent upon valuation metrics, valuation ratios, and sort of developing a way where he can say, all right, a company is worth X. Right now, the price is trading at, 30, 40% below what he believes it's worth based on his valuation analysis. And that's the kind of opportunity that he wants to buy. Buffett favors specialization over diversification, and compound interest is really what he regards as the holy grail to establishing wealth, and what he thinks, or what he would say, is the secret to how he, went from being not so wealthy to being one of the world's richest people. Be contrarian. So as this chart illustrates, most people, especially the unsophisticated investor or speculator, will be most euphoric, most excited about buying when the market is at a top. By the same token, when the market is at a bottom, that is when people will be most afraid of buying. Um, People's emotions tend to be based on the most recent price behavior. So if they saw price fall, decline, they'll get scared. Buffett knows, or Buffett believes in being contrarian. This is a common idea, especially amongst value investors. Buying when it's cheap, buying when it's out of favor, and selling when it's in vogue and when it's popular is sort of the name of the game to this style of investing and trading. Value investing. So basically, once you've developed an idea of what you think a company is worth, based on its earnings, based on how much earnings will grow in the future or anticipated earnings, you have an idea of what the company can be worth. Then you look at a company's price, and when it's trading below what you believe the company is worth, that's when you want to buy. That's when a value investor wants to buy. The margin of safety in this school of investing is the difference between its current price and what you believe the company is worth. So obviously, the bigger the gap, the better a buy opportunity here is. This dotted gray line, for instance, is, some value investors only want to buy when it's X% below. So let's say 40% below what they regard as its fair price or its true price. So then once it goes below that gray line, or below that target margin of safety, that's when they buy. And then they sell when it's either overvalued or properly valued, when the opportunity has been realized. That's sort of the basic approach of value investing, and what Buffett himself utilizes. Specialization is greater than diversification. Buffett definitely likes to focus on a few opportunities, a few niches, and acquiring big pieces of the companies that he does believe in. Insurance has been a huge area that Buffett has invested in through his company, Berkshire Hathaway. So here on the screen right now, you see some of the gains that Berkshire Hathaway has earned through its focus on investment company, or on insurance companies. Compound interest is the holy grail. So this is the chart that illustrates what happens with compound interest. If you invest $125 a month, eventually you get on a parabolic curve. That money keeps compounding, keeps growing, compounding upon itself, and it generates significant returns. In order for compound interest to really work, you need to have a long-term approach. It is a strategy that requires a lot of time, but eventually compound interest does get you on that parabolic curve. So that's sort of the name of the game. Buffett tends to hold his investments for a long time. Like many value investors and many investors focused on compound interest, it is really a long-term perspective. That's about it. If you have any questions, anything you want to share, join us over at informedtrades.com. Thanks, and best of luck in your trading.